Hey, what's up guys? John here. Some huge changes are coming to the real estate market. I think the biggest changes we've ever seen in our lifetime. And I think we're going to be stepping into a market where you're not going to be able to get a home mortgage anymore. I think it's going to be for cash buyers only. That's why I think it is so important that everyone understands all of the intricacies in this market and what they're doing. Because if you don't pay attention, they're going to rug pull your entire life's work. That's what's essentially going to happen right now. Real estate as a whole is being changed. Here's what's going on. So if you don't know, if you buy a property, let's say for example, you buy a $500,000 home, you put $100,000 down, 20%. The bank lends you 80%, which is $400,000. You have an obligation to pay monthly to that bank, and in return, they're going to get those monthly payments. Plus, they're going to know that you have homeowners insurance and that their investment's going to be protected in the event something happened to your property. Makes sense, right? Now, what they are saying is a couple of really big things. They're saying that 2/3 of homes in America are underinsured by about 22%, and some homes are underinsured by about 60%, right? But what they are now saying is that climate change, now whether whether you're for it or against it, it doesn't matter. We talk about money on this channel. It's going to impact all of us financially. This movement, this push, it's going to impact all of us. It says whether it's severe storms, crippling drought, or wildfires, climate change will impact both real estate and the housing market in the years to come. Here are the key changes to expect: higher insurance premiums, as well as catastrophes becoming more frequent. Insurance costs have jumped. In 2020, more than 45% of surveyed homeowners with natural disaster-related insurance policies have seen premiums increase. Assuming extreme weather patterns continue, it seems inevitable that premiums will continue to climb in the coming years. Coverage may be even more limited in high-risk areas, and insurance may ultimately become too expensive or even unavailable for some. Now, if let's say, for example, there's certain areas where you can't get homeowners insurance, what does that mean? It means that you're not going to be able to get a bank loan. And so the people that own properties in these markets that, they can't sell their properties, only they can sell to cash buyers. What does that mean? It means that their values are going to be coming down in a very, very big way. It gets more extreme. Increased home damage, climate-related events can be highly disruptive or destructive and cause immense damage to the interior and exterior of the house. If you are concerned about your home being damaged by changing weather patterns, it's important to take the necessary steps to mitigate risk. However, your best option for your protection is to reside in a low-risk area. Decrease value of homes in risk area. While the current behavior of buyers doesn't show this trend, if extreme weather events worsen in the coming years, more areas in the U.S. may become undesirable for future home buyers. This could cause property values in those areas to decline. Should property values decrease, many homeowners could face a situation where they lose their home equity. Home ownership and home equity is a major source of building wealth. As a result, it's possible that more people will decide to rent versus own rather than risk declining property values, right? Rent versus own. Now, it's very interesting how basically these corporations communicate, because this right now says consider renting, not buying a home. This is for retirees. They need to prepare. Renting may allow you to not only feel for your retirement selection, but to give you a handle on managing your finances, whether your adding property insurance costs are necessary and will be worth it, right? This is happening. This is 100% happening. Homeowners may also price their homes for sale in expectation for future climate risk. This means property values may be influenced not just by current hazard levels, but also by expectations of how hazard levels could evolve. Increased value of homes in low-risk areas. As home buyers or even renters slowly move away from negatively affected areas, relocating to lower climate risk areas may worsen competition. Should demand increase in these low-risk areas, buyers may see tough bidding wars and ultimately more expensive homes. And this is where they're starting to talk about when this whole thing changes, property taxes and everything's going to be going up to make due for all the tax revenue that's lost, right? So municipalities all over the U.S. will need to make their communities more resilient in the face of climate change. Paying for mitigation and adaptation measures will likely need to be funded through an increase in property taxes and fees. Additionally, as people leave coastal communities due to flooding or wooded areas due to wildfires, the tax base in those areas will shrink, further driving up taxes for those that remain. As climate change worsens, homeowners could end up with higher housing costs down the line, says Redfin chief economist Daryl Fairweather. Homeowners may need to install air conditioning in heat-prone areas to or install a metal roof in a fire-prone area. If home buyers are able to meet their home livable amidst the climate change, that could increase their home's value. But these investments aren't just the responsibility of individual homeowners. Local and state governments need to invest in resilient infrastructure for communities to remain livable, and will need tax revenue to fund those investments, right? And so they go through potential things that you could do, but the reality is, if they lose that tax revenue and people can't get insurance on these properties, what is this likely going to do? It's going to change the entire landscape of the real estate market. Now, what is it going to do to people that purchase, let's say, over the last couple of years, where they purchased at a very high valuation, and more than likely, when they purchase that property, if they purchased it, let's say 2 years ago, it's appreciated since then. And so if they got insurance back then, there may be a discrepancy in value in their homeowner insurance. And so in the event something happens to their property, or in the event that they simply, they stay there and then their value falls, but the cost of fixing up their home, whether it be material costs because of supply chain issues, labor costs, all these things go up, they're going to have that discrepancy, and they're going to have a potential issue down the road. Now, I believe what we could start to see happen is we could start to see this exodus. It's not going to be through what they're saying, but it's going to be this unique situation where they're talking about how, this is right here, and they say real estate buyers should ask climate change questions. Now, what I think is likely going to happen next, I believe what we are going to start to see is Zillow and Redfin and Trulia no longer just putting their Zestimate and their price opinions on your property, but what they are going to start doing is putting a climate change gauge or a risk level on it. So what's that ultimately going to do is when buyers go to search for properties, they're going to say, okay, this is a $500,000 property. Insurance cost was this in 2018. It's this in 2020. It's this in 2022. This is what they're projecting in 2025. And then they're starting to weigh the additional cost with buying properties in these certain areas. All of which is doing is selling fear on the acquisition of these assets, which is then only drawing the value down even further. I believe all these things are happening. Look what they're saying here. Forbes, one of the main publications that issue ever popular home buying destination list, now factors climate risk into an annual roundup of 25 retirement dream towns, but online search companies such as Zillow, Redfin, and Trulia have been slow to alert for flood risk and other potential red flags on listings. Realtor.com broke with the tendency adding flood data in 2020 and wildfire data compiled by nonprofit First Street this year. The First Street Realtor.com tool and accompanying report finds that as many as 20 million properties in the lower 48 states face moderate risk or up to 6% chance of experiencing wildfire over 30 years, essentially the life of the most popular mortgage. And unlike the typical narrow one-year window used to present present-day insurance pricing, the wildfire tool assesses the risk of homes and commercial buildings and damages wildfire they were struck now and up to 30 years in the future, right? This is what I think is ultimately going to happen here. There's no doubt about it. We're going to start to see more and more costs rise. Like, for example, they were saying here this is property insurance companies continue to drop customers in Florida, Tampa, as Florida homeowners wait for special sessions in property insurance reform to convene in May. More and more insurance companies are facing trouble and homeowners premiums are going up while policies are getting dropped by the thousands. As of May 1, 7 property insurance companies in Florida are currently in liquidation due to financial losses. Several national companies are being pulled out of the state, and for some still operating, their ratings are dropping, right? So we're seeing this big change happening. We're seeing other really big changes occurring in the real estate space with insurance. I think that's going to change how people buy real estate, where people invest in real estate. It's going to change tax revenue in local areas. I think only the rich are going to be able to afford to live in certain markets, and everyone else is going to get pushed out into other markets. I believe the smart entrepreneurs right now are paying close attention to everything that is happening. They're watching all the details. They're paying attention to everything. They're being forward thinking. They're paying attention to the risk that could come to them, to their business, to their investments, and they're pivoting ahead of time. They're pivoting before everyone else. I believe that the smart entrepreneurs right now are really scaling up their online businesses or their ventures, their current revenue stream. They're doubling, tripling, quadrupling down on that. They're reducing expenses while bringing in more cash flow. They're really coming out with a game plan so when things hit the fan, they have all that cash they can run out and invest. They can buy their home in full cash. That's the plan. That's what people should be striving for, I believe, over the next few years, to be able to go out there and buy a house outright in full cash or pay their current property off. Because if your insurance company over the next 2 years or 3 years or 4 years starts doubling your rates or increasing them by 20%, and the cost of your everyday life is increasing, it's going to get more and more challenging. But if you have a plan in advance, things are going to get a lot easier. Now, if you want to make money online, you want to start on YouTube, you want to have great credit, you want to learn how to invest, go to cashnow.video and work with me, and I'll assist you on this journey. I have a team of excellent credit repair specialists. I love YouTube and real estate, and I have bi-weekly calls, and you have 2 courses on real estate and YouTube. There's so much content, so much value, and so much support inside of cashnow.video. And drop your comments below. Hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the real estate market and what's going on in the economy now and in the future. And also subscribe to my second channel. It's going to be a show, an interactive show, a call-in show, and podcast starting this week. And LinkedIn, Twitter, TikTok, everything's in the banner. I'll catch you guys later.